Hello folks, this is Raj Sastry from Raj Option Trading. Today is April 8th, 2021. I want to talk about beaten down small cap software and IT stocks. So these are really between market cap 300 million to 2 billion. So this is my sweet spot in the stock market because these small cap stocks, as you all know, they really outperform broader market. So with that, let's look at few companies. I got few images here. First one is Veritone. It's a artificial intelligence company. They help a lot of industries with the unstructured data. Second is CleanSpark. These guys are into energy and energy management, and they got a very nice product. And third one is an enterprise software company. It's called Progress Software, doing really great. So we'll go into a little more details on these stocks and few other stocks in the software and IT market. So with that, according to the projection from PR and Newswire, software as a service and in general software, this whole market is going to grow at a compounded annual growth of 18.2% from 2020 to 2027. That's a very good projection. And with this type of growth, these software names that we are talking about, they will really outgrow the broader industry. So I love investing in small cap because these are really great, and these stocks always normally outperform large cap stocks. Think about Apple as an example. Apple stock to double is very difficult, whereas these stocks like Veritone, CleanSpark, Progress, these are low cap stocks. At times these are very low dollar amount stocks also. They can easily double and triple very quickly. So that's the advantage of investing in small cap stocks. They can be volatile, but we need to hold it for a while, and just like sowing a seed, you have to give it some time. They will really grow very nicely. So with that, let's go into details. So this is the list of the key stocks that I'll be talking about. They're in the software and IT industry, and the way it's organized is really I want to make sure the companies are beaten down in a 3-month period, like in a quarter. Earliest quarter stock is beaten down. As you can see here, CleanSpark, it's beaten down 47% down in last 3 months, and next one is 32%, and so on and so forth. And I also want to make sure these stocks really have growth or revenue growth. So as an example, CleanSpark, 38% revenue growth, 131% revenue growth in quarter to quarter. So it's an impressive revenue growth, and I want to make sure there's a good gross margin. So I highlighted few stocks here which are really great from a sales growth perspective. Same story with Veritone, and great from the gross margin perspective. A combination of a sales growth and a good gross margin is the recipe for success for most of these companies. Provided they are doing well. Normally, if the company does well, their revenue will grow year over year, quarter over quarter, and they will also have a good gross margin. And some companies like future FinTech, as example FTFT, it's a low price stock, but it's got a high valuation. I like these stocks also on a pullback. As example, right now it has pulled back really 8% in last 3 months, and 10 days it's going up a little bit. But I catch these stocks when they're down, so that way we can invest, forget about it for a while. They will do nicely. So, and I also look at a couple more things. As an example, if you look here, CleanSpark as an example, it's beaten down 47% in last 3 months. But if you look at 1 year, it's got a tremendous growth, 1800%. And if you look at 10-day, it's trying to pop up again. So even though it's down 47% in last 3 months, in last 10 days it's trying to come back up again. So I look for these type of turnaround stories, so that'll make my life a little easy. I can invest in them because they already turned around. So that's a good way to look at. And some companies, for example Bit Digital, it's a good company, but as you can see here, last 10 days it has gone up 19%. So I would watch out. I would buy this on a down day. but it's been coming down off late, so I would probably buy it at this point or closer to $16. And if you look at some of these stocks, for example, VirnetX Holding, Diebold Nerve, these are down in a 10-day period. And I'm comfortable in nibbling on these stocks, so that way these are already down, and I can be assured this will go up as we go forward. And especially Diebold here, I think they're doing pretty okay from a sales growth perspective. It's a little bit negative on a quarter over quarter, but in a I think it's got a good institution back, and I think company overall is a good company. So I'm not too much worried if the sales growth is a little bit negative. Provided company is doing well, they got solid sales, and solid okay type gross margin. So with that, let's go into couple highlights of the stocks and talk through them a little more. So first company we'll talk about is Sumo Logic, a ticker symbol SUMO. It provides a cloud native software as a service platform, helps with the digital transformation, modernization of applications, and cloud computing worldwide. They help with ingestion of data, analysis of applications, infrastructure, security. I mean, this is what is needed in the digital world. And the 86% of employees approve the CEO here, Raman Sire. That's a very good number, from an approval rating from the employees. And if you look at the stock here, stock has done nicely. This is a 1-year chart. Stock has done very nicely, earlier this year, earlier last year, and this year. I think they did well up to February and early March, but then they kind of dropped off. So I think this is a good opportunity after dropping off, in February March time frame. Now they're slowly trying to get the groove back. You can look at that by looking at this upturn here, and you can also look at the RSI, Relative Strength Index. It's trying to tick up at this point. So a RSI, a relative strength index of 36 is pretty low, but as it is going up, I think it's a good time to really buy some. A beaten down stock like this, especially a software as a service type play, it can do well as the market bounces. And if you look at the numbers from a market cap perspective, if you look at last 3 quarters or 2 quarters here, this is a relatively new company. They've almost doubled their market cap from 1031 to 131 2021. So that's a very good growth here. In 3 months, they almost almost doubled here. And they came down a little bit now with the market downturn here. I think it's a good opportunity to invest in this. And from a cash perspective, they got solid cash, $404 million. Not, it's a good amount. They can survive very easily. And they have no debt, which is always good. They got good free cash flow. And gross margin also very nice. Software as a service place, 73% gross margin. So with that, I recommend this stock, especially because stock has pulled back so much. And now they're trying to go up. Next, we'll talk about Veritone, ticker symbol VERI. So this was, one of the best performing stock in 2020. It was at the top. So this provides artificial intelligence solutions in US and UK, and they got a nice platform here, and they got AI models, cognitive queries. And they do facial recognition, object recognition, and ingest a lot of data. So I think if you look at the stock chart here, they've done nicely last year. As you can see here, stock has done very nicely. Some bumps along the way, but now the stock has taken a breather here. As you can see, between February and March, with all this rotation out of tech, this stock has taken a beating. And I feel like now it's stabilizing. It can slowly make its move up again. And you can also see that from the RSI, Relative Strength Index, it's now stabilizing and slowly ticking up. So I like to buy the stocks when they are a little bit pulled back and ready to make their next move. slowly it will cross some of these moving averages, and now this moving average which will be support, and it will bounce off and it will take on the next one. That's what I like to see in these companies. And if you look at the market cap, clearly this company has done nicely. They have done 63 million here, 331 2020, almost more than they did nicely, more than four or five times here. Again, they came down here during the COVID times, but went back up again. So overall, stock is volatile, as you can see. From the price itself, $2 stock became $14, became $28, $25. I mean, you cannot see this type of return in a huge, large cap stock. They do have good amount of sales, positive sales, nice quarter over quarter growth from a revenue growth perspective. They got a good amount of cash, and some debt which is very low debt, and nice gross margin, 75% gross margin. So even valuation is low, 13 times next year's sales, which is not bad at all. So with that, I recommend Veritone stock, for your portfolio. You can buy some and keep it for longer term and get a nice appreciation. Next, we will talk about Bit Digital, ticker symbol BTBT. These guys are into Bitcoin mining business, and this stock is tethered towards the price of Bitcoin. As the price of Bitcoin surges, Bitcoin mining will become so profitable operation. So this stock is really, it's volatile, as you can see here. It shot up like anything here, probably a short squeeze, came back, went up, came back, went up. Now it's trying to take a breather and make its way up. So this is, really, you have to be a little bit patient with this stock and catch it when it's fallen off, like right now, and hold it for a long time. And RSI, relative strength index, as you can see, it's low. It's trying to tick up right now. It's trying to gain some momentum. But caution here, if Bitcoin falls off, this stock will also fall off. You could take that as an opportunity and buy some more. From a market cap perspective, clearly, these guys are done really nicely. 1231, it was $6 million, 28, 179, crossed $1 billion in the end of last year, and now it's $813 million. So nicely, doing nice appreciation in market cap. That tells me these guys are doing something right, and now they're taking a breather right now. Stock price also, as you can see here, from 40 cents, it came all the way to $16, which is a huge move. And they have, cash, in this case, they got 405.13. I'm sure they got a lot of Bitcoins itself. The cash itself is a little bit low, which is okay because they're holding some Bitcoins. And gross margin is pretty good, 41%. And price to sales is a little pricey, but I think it's understandable for these type of business. So I recommend Bit Digital for your portfolio. Only caution is buy this only on pullbacks like right now, and take all the pullbacks as a buying opportunity. Hold it for long term. Whenever Bitcoin pops, you can take some position off, and then when it falls back again, you can buy more BTBT. So next is CleanSpark. CleanSpark is into energy software. These guys really help to manage your distributed energy systems, and also manage your renewable energy. So with the energy, you need to have some good system to manage. So these guys do that job very nicely. And from a stock chart perspective, as you can see here, very nice stock chart. They've done nicely up to 2020. 2021, they're kind of bouncing off a little bit up and down. Right now, they're at $21. That's one of the reasons I kind of like to buy these stocks when they're a little bit down. So it's you can wait and get some appreciation. And from a RSI, relative strength index, it's really at a lower point right now, trying to tick up as we speak. That's when you need to buy these companies. And from a stock market cap perspective, as you can see here, nice appreciation, 26. It came down during COVID times, but now kind of accelerated nicely. Now there is a small pullback. Right, current market cap is around $714 million. And from a price perspective, I think there's a good appreciation here. They came down a little bit during the COVID times, but bounced back very nicely. That's the reason whenever this comes down, I think it's good to buy because the appreciation is so huge. I think it's hard to really miss this opportunity to buy. They are doing very well from a quarter-over-quarter sales, as you can see here, 131.10. Yeah, that's mainly because the comps, they're comparing this with the old days here. If you compare $1 to $26 million to 983, you'll get a good comp. But going forward, comps could be a little different, or comparison could be a little difficult because now they're at a higher level from a sales perspective. It's just $2 million sales, but they have to make $4 million to make it 50%. So with that, they got good amount of cash, some debt, not too bad at all, low debt, and nice gross margin. And the price is a little bit pricey from a price to sales perspective, but I think for stocks like this, it's understandable. I think I would like to buy this stock on a pullback like right now and hold it for a long time. Next, we'll talk about Diebold Nixdorf. So this is again provides connected commerce solutions for the retailers in Europe, Asia, Middle East. They got both hardware as well as software. From a stock chart perspective, 84% approve the CEO here. That's a very good approval number. And from a stock chart, they've been doing very nicely. I like the consistency here. See the way it's going up, down, overall, all the way up. But now it's taking a breather. A $13 stock took a breather. I can easily see that going up again. That's why I like to buy this stock also in a pullback. In fact, I think I just bought some today itself. And from an RSI perspective, relative strength, right now it's $38. It's still ticking down a little bit. So that's where I feel like this may have one or two little bit down days, but still you'd like to. It's good to add on a down day. If it goes further down, you can buy some more. That's how I like to play these type of stocks. Don't buy all at once. Instead, just take all the pullback as a buying opportunity. And from a market cap perspective, nice appreciation, 272 in 331, all the way to $1 billion now. That's a very nice appreciation. That's one of the reasons I invest in small caps heavily. And from a stock price perspective, right now they're into $13. But as you can see, a nice appreciation. Even during the COVID times, this company has done nicely. I mean, did not have too much hiccups. Quarter-over-quarter sales is a little bit negative. I think it's understandable because their comp sales are a little higher, as you can see here. That's why it's a little bit negative, but I think it's not too bad. Just 4%. I think they will do well. They got good amount of cash, no debt, as you can see here, and they also have nice gross margin. I would like to see it a little higher, but I think it's okay. They have both hardware as well as software. I think hardware typically comes with a lower margin. And from a price to sales perspective, from a valuation perspective, it's very cheap, not expensive at all. So with that, I recommend to buy this stock. It's already pulled back. Nice company. You could buy some and hold it for a while. Next is Progress Software, ticker symbol PRGS, and they're into business applications. They do a lot of these data connectivity, integration, application development, and deployment. And 71% approve the CEO Yogesh. And from a stock chart perspective, nice looking chart here. Higher highs, higher lows. I mean, that's just like we would like to see. It pulled back a little bit in February time frame. Now it's trying to make its way up again. So I think I feel very comfortable by looking at the chart. Shows the signs of steady growth here. And right now stock has fallen down a little bit. This could be a good opportunity to buy. From an RSI perspective, a little bit lower comparatively. I think that's when you need to buy the stock. From a market cap perspective, this one is a little bit steady eddy, as you can see. 1.86 came down a little bit. came a little bit, went up. So I think overall this is a steady Eddie type stock. You buy on a pullback, you can expect a bounce and hold it for a long time. And they got positive sales growth, as you can see here. Earnings per share is positive. Company is making money and profit. Good cash and some debt, which is a little high, but it's manageable. And nice gross margin for a software company. 85% gross margin, which is common in a software industry. And from a valuation perspective, it's not expensive, pretty cheap. So with that, I recommend PRGS, Progress Software, for your portfolio. Next, we'll look at some of the other companies that we talked about. I like some of these companies. I buy them on a pullback. First one is Ping. Ping is into login and the single sign-on and the security. The reason it's coming down is one of its competitor, Okta. It's really doing nicely, and these guys are catching up with their big brother Okta. I think I like to buy a little bit as it comes down drastically like this, and hold it. Don't invest too much because it's got stiff competition from Okta. Next is Paya. This company also, as you can see here, it's been doing lower lows for a while, and now it's trying to get some groove back. So stock has run up a little bit here, so that's why I want to wait a little bit for it to little bit cool off. I might buy a little bit and keep, but since it has shot up a little bit, it might cool off a little bit. So I would buy some here and see if there is any pullback or not, and then progress accordingly. Mitek, MITK, I think this company also, as you can see here, a nice company, pulled back a little bit, now trying to make their way up. $15 stock, low RSI. I'm comfortable buying some and holding for a long time. YEXT, same story. It's a good company. Stock is all the way all over the map, as you can see here, up down, up down. Now it's relatively down, so good time to buy and hope for a bounce. You could even wait a little bit because it had some bounce back here. You could wait a little bit, buy it on a down day. Next is RPAY. As you can see here, this stock is a very good stock for a trading. It's got nice bounces and peaks and valleys. Right now it's trying to go up here. I would wait for a quick pullback here, buy, then sell it on a bounce. Stocks like this are very good. It's in a tight resistance and support mode. You buy at the resistance, buy at the support, sell at the resistance. It's pretty predictable when it comes to a stock like this. Next is CNDT, and this is a nice looking chart. I would, it's trying to pull back a little bit. I would buy some and keep it for long term. I think it's a really nice looking chart, consistent, steady Eddie type stock. Next is GBOX. It's a green box. I think company is doing really nicely. Only thing is I would like stock to come back a little bit. It's really took off crazily here. I would wait for a pullback. I would buy and take it from there. FTFT, we talked about it. It's a China play into FinTech. I think now stock has come down a little bit. It's a good time to buy some. It's a very low dollar stock, $5.26, and keep it for a while and take it from there. SaaS, this is also a SaaS company, helps with the communications and whatnot. I think this company has pulled back pretty hard. I'm comfortable to buy some and hold for a while. This stock also kind of has ups and downs. I would buy right now. It's been down for a couple of days. I've been watching this. I've been nibbling a little bit and then wait for appreciation. So with that then we got a couple more here. PAR, same story here. Stock has shot up so nicely. I would wait for a pullback. On a pullback, I would buy. Right now it's a little bit higher price. BCOV, same story. Very nice, steady Eddie type stock. I would buy this also on a pullback. And VHC, it's already pulled back hard. As you can see here, this is a trading stock again, goes up and down all over the map. So on a down day, if you buy, you can trade it at a higher price. This may not be a good investment type stock, but it's good on a for trading. GreenSky, this is a nice stock. You could buy this one right now. It's pulled back already. Just a $6 stock. You could buy and hold it for a while, get a good bounce. Porch, these guys are helping with the if you want to buy a house, these guys will help with all your utilities, cable connection and whatnot. I think company has pulled back hard now. It's good to buy on a pullback and keep it for a while. UIS, I think same story here, pulled back, good time to buy. And Allot, I would wait a little bit. It's a little hot right now to buy. I would buy on a pullback. But if you want to nibble something now, that's also okay. Same story, MOGO, good company, nice looking chart. I think it's good to buy. It's a $10 stock. You could buy and keep it for a while. And same story, REKR. REKR is up right now. I would wait for a small pullback and buy and take it from there. So with that, in summary, these are my favorite stocks. Some of the stocks are a little bit hot right now, as you can see from a 10-day moving average. But I would buy these stocks in a pullback, and they will give a nice appreciation for your portfolio. And you can really, because these are small cap stocks, you can really, get a good return from these stocks. So with that, happy investing. Thank you very much.